Hello, everyone. Welcome to the Moore Kingston Smith India UK Patrika. I'm Kishore Achary, Assistant Vice President for the India Group at Moore Kingston Smith, and I'm based in Gurgaon, India. Today, we are pleased to engage with Mohan Bhuyan, India representative of the primary markets and the London Stock Exchange Group. Broadly, we would be discussing with him on how LSE can play a role in the international growth of Indian businesses and what does LSE's past experience has been from the India market and how it sees the future engagements developing with the country. So Mohan, thank you so much for your time today. And to kickstart our discussion, could you tell us more about the various avenues that LSE offers to Indian and international businesses to raise capital and the support that the group would provide for these companies?
Thank you, Kishore. First of all, thank you and to Moore Kingston Smith for having me for this. I'm glad to be here. And to answer your question, actually, historically, there have been about 72 Indian companies with some sort of equity presence on the London Stock Exchange. And when I say some sort of equity presence, I'm talking about obviously main market listings, as well as global depository receipts listings and AIM admissions. So that's on the equity side. And on the debt side, we've had about 20 Indian issuers kind of raise by issuing bonds, overseas bonds in different currencies, including dollars, pounds, as well as in Indian rupees known as masala bonds. So together, the total equity and debt capital raise is almost close to $30 billion. And we are going back, right to the 1990s for this. So $14 billion on the equity side and $15 billion on the debt side. So historically, there has been a very strong relationship. And, of late, of course, as India's capital markets have developed and as rules have become slightly more stringent about, what Indian companies can do as far as overseas capital raising is concerned. So we've seen a little bit of a decline in Indian issuances, not just to London, but to other overseas markets as well. That said, the pipeline for us remains quite strong. And as has been in the past, we have, we of course have 3 or 4 different routes that we can offer to Indian companies to raise capital. And we shall, of course, for the purpose of this discussion, restrict it to equity. But as far as equity is concerned, of course, there is the traditional main market, which is available to Indian companies, more so for companies which have, either a subsidiary or an acquisition overseas in which to spin off and list separately. Or, we also have, a great example of this is Airtel Africa, where, which was the subsidiary of, obviously, of, Bharti Airtel Limited, an overseas subsidiary. It was an acquisition many years ago from Zain Telecom in Kuwait. And then they grew the business to a sufficient size where they decided to list that business to raise more funds on the equity side. And they chose London. So, businesses like that, London obviously is always open to. Airtel Africa is a Netherlands incorporated entity, and they put in a British topco as well, which then went on to become the listing company. So that is one. Of course, for listed businesses in India, the companies which are listed on the Bombay Stock Exchange, on the National Stock Exchange, we have the depository receipts route available. And this is the main route whereby Indian companies can acquire an overseas listing. Yes, it will be a secondary listing because the primary listing will be in India, but the depository receipts route remains open. Then, of course, as you know, Kishore, there are many Indian companies, especially ones which are in new age sectors like tech, a few in, say, renewable energy, things like battery storage and pharmaceuticals as well, which have, they may operate in India or they may have most of their people based in India, but they have overseas incorporations, usually in jurisdictions like Singapore or the Netherlands, or maybe some low tax jurisdiction like Mauritius or the Cayman Islands, etc. And so these companies then are very much part of the pipeline for most international exchanges, including London. So as far as the routes are concerned, of course, we as I mentioned, we have the main market, and we have the depository receipts route, and we also have AIM, which is the growth market for of the London Stock Exchange. And we've seen historically there have been about 26 to 30 Indian entities of various types, including funds, which use the route, which used AIM in order to establish a public presence and to raise capital and grow. And that route, of course, remains open. But then those companies have to have overseas incorporations in order to access them. You can't do it as an Indian incorporated company.
Thanks for that, Mohan. We coming back to the listing side of things, we have seen a number of tech companies listing in the Indian bourses for the past couple of years, and we have seen Indian tech companies or the international tech companies generally looking at the US, the NASDAQ, for sort of international capital raise. How does LSE differentiate itself from a NASDAQ or some of the other bourses in the European market?
So, Kishore, let me answer that question in two parts. One is to take a step back and address the whole issue of where Indian companies should list. Right now, there are, of course, various types of Indian companies, as I mentioned in the in response to your first question. And nowadays, of course, the emphasis or the spotlight, as it were, is mostly on tech companies. Now, even if you're a tech company, a great majority of these tech companies are the businesses are very domestic facing. So they are, for example, if you look at the likes of Zomato, or the ones which have listed recently, Zomato, Policybazaar, Paytm, these are essentially tech businesses which are, attuned towards or facing Indian customers. So our contention always has been that, international exchanges are not a substitute for domestic exchanges. They should work as in a complementary fashion. So where it is required, these international exchanges can be either primary or secondary listing venues, or for capital raising, as well as other requirements such as gaining an acquisition currency in a dollar denominated security, or to widen the investor base, which than what is available in India. And I include, than what is available through the foreign portfolio investor route, right? So that is a limited foreign sector. There are much bigger audiences of investors in the US and indeed in London as well. So this is the scenario. So what we are saying is that, like most Indian companies, be they tech or they're manufacturing, traditional smokestack industries, what have you, they will tend to raise capital and list in India, and they should. But we are looking at really a handful of specialist businesses which are primarily internationally focused. Most of their revenues come from overseas, large markets like Western Europe or the United States, or companies which are in such new age technologies that their businesses are better understood by overseas investors because they have had experience of such businesses in their own markets. So companies like that, which will really be a handful, are the ones which will seek an international listing, right? So again, these are the companies that everybody should consider their particular exchange as far as listing is concerned, and to raise capital. Now, coming back to the whole US versus the rest of the world, or the US versus India, or the US versus the UK. The US, of course, has been the largest tech market in the world, and this has been right from inception. So you have the giants. They have been at the forefront of technology development. They have the largest technology market in the world as far as consumers are concerned, as far as businesses are concerned, even B2B or B2C, or C2C, whatever acronym you want to use. The US is the largest market. So therefore, it is quite natural that tech companies will aspire to be listed in the US or to raise capital in the US. That said, what is little known, especially in markets like India, is that even London, for example, has a very, very large tech market. We have about 225 tech companies, close to 220 tech companies. with a total market cap which fluctuates between say $150 billion to about $300 billion, depending on what where the markets are. And these tech companies are of different stripes. So we have software as a service companies. We have a bunch of fintechs. We have gaming companies, including a few from the US, come and list on our markets. We have hardware companies. We have marketplaces. We have e-commerce companies. So we have companies which similar to Zomato and Swiggy in India. Food delivery companies which are listed in London. So there's a wide gamut of tech companies listed in London. And in fact, last year, where we had a record year as far as IPOs are concerned, there were like 126 IPOs last year, of which 37 can be described as tech. And total IPO proceeds raised, which was something like almost $17 billion. About 40% of that, about $9.5 billion, was actually raised by tech companies. So that just kind of puts into perspective that while the US is no doubt the premier destination for tech, it is not the only destination. And there are, of course, various other reasons, why companies from India and other markets such as Israel and even Western Europe, Australia, etc., should consider, other markets than the US. If you like, I can go into that as well.
No, so this is good. I mean, we would want to kind of at least start this discussion initially and then probably get more feedback from some of our subscribers and people who we've been speaking with over the years and get into a more detailed conversation. And so yes, definitely food for thought and food for discussion for our next conversation as well. But since you mentioned about, since we're talking about tech companies primarily, are there any specific type or category of companies that you think is ideal contender for an LSE listing, or are there certain stage at which the company should be for them to maybe start exploring the LSE for listing as well?
So, typically, if you look at the type of companies, I would say I would like to segregate them as in the type of business that they do.
Right.
So, for example, London Stock Exchange is the most international exchange in the world, right? So, since 2019, and this is like, post-Brexit, we've had about 47 international companies IPO on the market. Like every year, between 3 or 5 out of the top 10 IPOs are international companies. So we attract international companies of all stripes, from all sectors, from all businesses. So of late, we are seeing an increase in tech businesses, of course, but traditionally, the traditional businesses, legacy businesses which have come to the London Stock Exchange continue to come. So, we would be interested in drawing interest from Indian operating companies as well. Bear in mind that Indian companies are not allowed per our regulations in India to have to issue their equity shares to overseas investors and then obtain an overseas listing. There is a policy which has been in the works since about 2019 or so, but that policy hasn't yet become effective. So so till that time, Indian companies who need to obtain an overseas listing will have to use the depository receipts route, or find some other ways, for example, by spinning off a subsidiary, and list that on an overseas exchange to gain a foreign listing. So that is that. And I would also just wanted to hark back to the previous question and tell you that as far as there are 2 or 3 things that Indian companies are very, they're very determined about, right? And one, of course, is that like, where are my peers? Where are my peers and where are they listed? But now we have seen, and this is true especially for a company like Zomato as well. When Zomato was preparing for its IPO in India, it was actually comped and compared with its peers, which are listed in London as well as in with New York. So it is paired with the Grubhubs and the Just Eats and the Uber Eats and all the other peers that it has on other exchanges as well. Right. So nowadays, like most companies which come to market, they will be, especially if they're in the tech side of things, will be comped with their peers across. So, the old thing that I'll list where all my peers are, that doesn't really hold good because, you will be compared anyhow, wherever they're listed. Second is on the valuations.
Yeah.
So we've seen that as far as valuation is concerned, there is a feeling, a perception that you get better valuations in the United States than anywhere else, especially if you're a tech company. But actually, it's not true because it really depends on how the company is performing. So if your company is growing in terms of your revenues as well as profitability measures like cash or EBIT or EBITDA, at or around the rule of 40, which is like the growth of your revenues as well as the growth of your profits or your cash should be at the 40% level, right? Which is the rule of 40. Then you will see that the valuations on exchanges outside the US are similar to the valuations that such companies growing at such rates are getting in the United States as well. So therefore, it really is a question then, like, what are you going to get out of your listing? So now, again, in the United States, a company which has a market cap of say $5 to $10 billion is going to be a very, very small fish in a very large pond, right?
Yeah.
It might not get the profile that it would expect in markets like India or any other market. It might not get the analyst coverage that it expects. It might not, be known and, get the acclaim that, it would otherwise get from having a New York or a NASDAQ listing. But in a market like London, a $5 billion company would put you very close to the FTSE 100. If you're, say, about $7 to $8 billion, you would probably get an entry into the FTSE 100. If you are close to $1 billion in market cap, you would probably be a shoe-in for the FTSE 250. So these are other considerations to make. You would be much more valued, much more visible, have a much bigger profile on a smaller exchange, where you have 200 tech companies rather than on a bigger exchange like New York or a NASDAQ, where there are thousands of such tech companies.
Oh, that's interesting and then good sort of analysis on LSE versus the other sort of and particularly NASDAQ and in our current scenario, this is good to kind of understand. We've spoken about what LSE has been sort of experiencing till now and the kind of companies have been sort of looking at the market. What sort of future outlook do you have for LSE, and are there going to be any new offerings that we can expect in the long or short-term horizon from the group?
Yeah, so as far as the future goes, I think first of all, again, I would just like to remind your viewers that see, LSE is known as an international exchange. It is the world's most international exchange, and not just I've already gave you the numbers as far as issuers are concerned, but essentially about 40%, close to 40% of London-listed companies are from outside the UK. And even if you look at the FTSE 100, more than 75% of FTSE 100 constituents actually get the revenues from outside the UK, right? So, or the bulk of the revenues from outside the UK. So therefore, London has always been a global financial center. It attracts companies and issuers from all over the world, particularly from regions, such as Asia Pac and Africa, and increasingly the Middle East, as well as, regions such as Russia and the CIS. So we've seen it after Brexit as well. After post-Brexit, there has not been any dip on, the two or three, measures that, one can talk about as far as this is concerned. So, whether the number of companies from overseas coming to London have diminished, no. Whether the assets under management in the UK, which are dedicated to London-listed companies, has that diminished? No, in fact, it has increased. So now we are talking close to about $400 billion worth of assets under management, which are dedicated to UK listed stocks, right? So that And just to give you perspective on that, that's 3 times more than the next European exchange. And the next European exchange is not the Deutsche Börse or even Amsterdam, but it's actually the Swiss Stock Exchange in terms of asset under management, which are dedicated to stocks listed on that particular exchange. If you look at the investor base in the UK, we actually have 40% of institutional investors are actually from the United States, 40% are from the UK, 15% or 14 or 15% are from the rest of Europe, and about 5 to 6% from the rest of the world. So, that international veneer that the London Stock Exchange has will continue to be, and I don't see that diminishing going forward. Right now, as far as new things are concerned, actually, the UK itself, has taken a lot of steps to preserve London's status as a global financial center. And if you would just permit me to talk about 3 or 4 of the reforms that it has undertaken on the primary markets, it'll give you an idea of what to expect going forward. So, the 3 or 4 key reforms have come in already on the primary markets front, which is the raising of equity capital and the listing of businesses on a stock exchange. So firstly, the free float requirement, which used to be 25% earlier, to achieve a premium listing or to achieve a listing on the London Stock Exchange has now come down to 10%, right? The minimum market capitalization required for a main market listing has gone up from £700,000 to £30 million. So therefore now, companies of a certain size, smaller than that, will willy-nilly be, directed towards AIM rather than to the main market. So the main market will then be the preserve for larger companies. Sure. DVR shares, that is shares with differential voting rights, which were not previously allowed in the premium segment of the main market. And the premium segment of the main market is the segment which is required for index inclusion in the FTSE indices. Those are now allowed on the premium segment. There are now changes afoot, and the FCA is consulting, and they've done a lot of work already on this, on the prospectus regulations. So there's, you can expect reforms and relaxations or streamlining there as well. There's going to be more changes on the secondary markets front, in the sense that secondary capital raising. So therefore, it'll be easier then for companies which are already listed on the stock exchange to then go on for follow-on capital, to raise capital from existing as well as new investors. There might not be, for example, requirements for elaborate prospectuses for a right, other than for a rights issue. So if you're going in, for something which is similar to a qualified institutional placement in India, then, the prognosis is that, a listed company, because it's already made all the declarations, will not then, and disclosures will not then be required to produce yet another prospectus to go for that kind of offer. So these reforms and these changes are on the anvil. Some of them have already been implemented. More are expected. So this is only going to make London a much more appealing and attractive market, not just for UK companies, for international companies as well. Okay. And as far as new things are concerned, there are 2 or 3 things that the London Stock Exchange itself has launched or has announced that it's going to launch and implement from this year onwards. There is going to be a new voluntary carbon market. Okay. So the voluntary carbon market they're going to be different from the others which are already prevalent, because those are mostly concentrated on the trading of carbon credits. Right. Well, this will be a market which will facilitate the primary market or the funding of carbon credits. Right? Okay. So carbon credits globally they have a problem as far as funding is concerned. Right. And so we are trying to solve that particular problem, and this is now in the consultation phase and will hopefully be implemented, towards end of this year. We have also invested in a platform called Flow. It's FLOWW, 2 W's. And Flow is, a platform which matches the startups with not just venture capital investors, but investors in general. So then, London Stock Exchange is now, we are consulting with regulators and the market on how we can, achieve primary capital raising even for private companies. So in the future, as our CEO Julia Hoggett says, the London Stock Exchange is looking at being agnostic between companies which are public and companies which are private. So we will cater, historically we have been catering only to public companies, but we are looking forward to meeting the requirements of private companies as well. That's it. And we have also already invested in primary bid, which makes it easier for retail investors, which have traditionally been ignored from things such as follow-on offers, to actually invest, in foreign offers and IPOs and similar equity offers. So a lot of changes afoot, a lot of new things are on the horizon. So watch this space.
No, this is very interesting developments, as you just pointed out, in terms of everyone sort of starting to focus more on the ESG aspects, and it's good to know that an exchange is also looking at sort of facilitating and sort of being a catalyst, so to say. Yeah.
Even on the ESG front, thank you for bringing it up, and maybe you could add it. I know we're a little bit over the time, but this is going to be edited anyway. So on the ESG front as well, there's lots that we do, and it's not just the traditional securities where ESG capital has been raised, so to speak. Right? We're not just talking about bonds,
right?
Green bonds and sustainability-linked bonds, but even on the equity front. For example, like the London Stock Exchange now has more than 100 companies which are designated as green economy mark companies. Okay. And we actually have a couple of Indian companies as well who have the green economy mark. And the green economy mark is given to companies which can demonstrate, according to FTSE Russell criteria, that their revenues from green sources are greater than 50%. So once you can demonstrate that, then you can apply and get the green economy mark, and then that immediately kind of enhances your appeal and your visibility to investors who are looking for green investments. So there is a huge cohort of funds now which are like ESG oriented, for example, and but there is somewhat a little bit of a dearth of supply on genuine green investment opportunities. So this kind of solves that particular problem on the equity front as well.
That's great. Okay. No, Mohan, thank you so much for once again to kind of give this overall overview of what LSE has to offer, and I'm sure there are quite a few pointers which Indian businesses and the overall business community kind of can take forward and probably can process this further, and maybe we can have a more detailed discussion around that in the times to come. Thanks again for speaking with us and the overall sort of conversation on UK listings. For our audiences, if you have any questions that you have for Mohan or for us, please reach out to us on the coordinates that are provided in the Patrika, and we will try to respond to you as soon as possible, and we will connect you with Mohan as well directly. He's anyways there on LinkedIn to reach out and speak with. Thanks again, Mohan, for the time, and we hope to discuss soon and speak soon on the future prospects of sort of working along with the LSE as well.
Thank you very much, Kishore. It was a privilege to be with you. Thank you.
Thank you so much.